Stock markets in Europe are trading slightly higher, with the Euro Stoxx 50 index up around about 24 points, while the DAX in Germany is currently up over 60 points. The FTSE 100 in London is currently trading flat, underperforming its European peers. In the currency space, the euro is trading higher against the dollar. The yen is also a little firmer, the dollar is weaker. In the commodity space, gold is currently up about $6. Other precious metals are also tracking higher. Oil prices are somewhat stable. And in the government bonds area, UK gilts and German bonds are seeing investors exit those particular assets and going more toward the riskier assets, so to speak. Elsewhere across the board, it's generally the risk tone seems to be somewhat one of an improving nature. Probably the best way to put it, in the face of a US government shutdown. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I want to try my best to give you a quick wrap up of what's going on in financial markets. So, of course, the big news that's dominating price action today, and the headlines, is that the US government is closed now for a partial shutdown, and that's after US lawmakers, Democrats and Republicans, failed to bridge their differences and drum out an agreement to avert a shutdown. This means a number of agencies have closed. Around 800,000 federal employees have been sent home on unpaid leave. Now, a lot of people reckon that the news is somewhat factored in, priced into the markets, so investors are feeling a bit more sanguine about the whole thing at the moment. As of now, as it currently stands, it's not hitting real economic growth. However, the longer the US lawmakers delay this, the longer the talks become protracted, and there is no common ground found between Republicans and Democrats, then it's only a matter of time before it starts hitting the real economy and feeding into the wallets of many Americans, particularly those 800,000 who are on unpaid leave at the moment. There's also some hesitation about what's going to happen with economic data out from the US, given the fact that a number of agencies are closed. We're not sure yet if we are going to see the release of the non-farm payrolls figure, which is compiled by the Labour Department, which is now closed, and that was due for Friday, but there are some questions about if this particular release will be out anytime soon. That all means that Federal Reserve Chairman Ben Bernanke is almost going in blind to the October policy meeting. He will not have a good idea of what's going on in the labour market, which ultimately means that he has little choice but to hold off from tapering activity. And there's obviously a large possibility that the Federal Reserve will not taper quantitative easing by the end of this year, 2013, and may have to wait until 2014 before they get further signals that the US economy can actually withhold and withstand some sort of tapering activity. Now, US stock futures are a bit more perkier on the back of this, and investors are starting the month of October on more of a buoyant tone. It's a bit better out there. This is after yesterday's deep falls and deep losses across global equities. We have to remember yesterday, because it was the last day of the month and also the last day of the quarter, we saw a hefty amount of month-end position squaring, which almost compounded a lot of the downside moves in the market. And so far today, we're also dealing with economic data. So far, PMIs from Europe haven't been that great, a bit of a dip down on that. Still within the expansion territory above 50, but nonetheless, Germany starting to show signs of a bit of weakness and slowing, and that's the same case with France. And we also have the UK PMI number out soon, and also the US ISM number, manufacturing number, that is, out later on this afternoon. That is certainly out, not in dispute like some of the other US economic indicators. That is all for your daily market buy. Thank you for tuning in, and I'll see you guys tomorrow.